Polynomial support and resistance. Have you ever had a hard time drawing in support and resistance just to find out that it was wrong? Price breaks through or breaks above, and all the time you're scratching your head. What happened? In this video, we're going to go in depth from beginner all the way to advanced technical analysis. Some basic thoughts on support and resistance all the way to how to trade it successfully. Obviously, you're going to hear some things that you've already heard before, but I guarantee you'll hear things that you've never heard before to help you be a better trader. And if you want more, follow for more. Now for the opening act. Support trend lines. Support trend lines are just that. They give the support to the candlesticks. As they come down, they bounce off the support line and go up. Uptrend support is when price and the trend line are going upward, giving support to the bottom of the candlesticks. Once it breaks that trend line, the uptrend support is over. Sideways support. When a horizontal line is made underneath the candlesticks, giving it support for price to bounce off. Downtrend support is when the trend line is in a downward angle and price bounces off of it going up, but then continuing lower. And the polynomial works the same way. When the polynomial is trending up, it shows you support areas to enter into the trade. When the polynomial trend is down, it will show you support areas to exit the trade. Even if the charts are going sideways, it will show you the horizontal trend line. So no matter what chart you're on, the polynomial always shows you support. Now for the resistance trend lines. Resistance trend lines are always above your candlesticks. They'll be here, price will come up, and they'll be above, showing you where the resistance is. With uptrend resistance, you'll have a diagonal line going upward. Price will hit up against the top of that resistance, as the example shows. Sideways resistance will have a horizontal line where price goes up, but then falls back down. Downtrend resistance will have a diagonal line down, where price comes up, but keeps going lower. The polynomial also shows you downward resistance, where price will come up, but then continue lower. The polynomial will also show you the horizontal or sideways resistance. This is common with a double top. The polynomial also shows you the uptrending resistance. Resistance is also key if you're going to take profits. Now I know what you're asking. Well, how do you find the support levels? I'm glad you asked. Support lows. Did you know that support always lands on a low? Let me show you. Well, in order to have an uptrend, you have to have higher lows. In order for you to have a downtrend, you have to have lower lows. And so your support should always be at the lows. Notice how big the moves are from the support lows on an uptrend versus the support lows on a downtrend. Based on the example, we have a low, a higher low, a higher low, another higher low, another higher low, and now an equal low. And the polynomial shows you this support. It also shows you the support on equal lows, which is great for taking trades long. But remember what the example showed us. Not all support is equal. Because this is a downtrend, the counter trend trade was not very much in size before price kept going lower. So when we have a downtrend, don't take these trades. So that's support always at the lows of the candlesticks. Now let's look at resistance at the highs. Resistance highs. Your resistance lines will always come in at the highs of the candlesticks. When you're in an uptrend, you'll have higher highs. And when you're in a downtrend, you'll have lower highs. And that's why I say the highs will always have resistance, no matter if it's in an uptrend or downtrend. In an uptrending stock, your highs will come into the resistance of the polynomial channel. On a stock going sideways, your equal highs here will be at the resistance side of the polynomial channel. On a downtrending channel, your lower highs will always be up against the polynomial resistance. Great place to enter or trade lower. Now that we've talked about support and resistance, let's put them together. Polynomial support and resistance. The polynomial channel has 4 different patterns. First is the uptrend, the lower band being the polynomial support, showing you where to enter into the trade long because of the uptrending stock. Next is the resistance side of the band, showing you great places to take profit. Next is the rotation from an uptrend to a sideways trend to a downtrend, showing you support and resistance. Next will be a completely downtrending channel, showing you all the resistance levels to short and all the places to take your profits. Next is when the downtrend is over, price starts bottoming out, going sideways, showing you areas of resistance and support to take the trade long. So no matter what picture you want to see, the polynomial will give it to you. Now that we've seen 4 different looks at the polynomial and the channel and what happens with the trend and how it turns, goes from trend continuation, uptrend, to trend reversal, from uptrend to downtrend, then downtrend continuation into reversal, downtrend to uptrend reversal. I know it seems like a lot, but let's break it down because really there's only 3 ways to trade that. The first is trend continuation. When the trend is up, you buy at support in anticipation that price will continue higher. The same is true for a downtrend. You identify the resistance areas, create a short entry, enter into the trade lower. Now the next one, I recommend against it if you can, because you're not going to make as much money. And there's so many opportunities out there. Why do something that's going to make you less money? So let's look at the counter trend trade. In this example, we can see that we have an uptrend, came into resistance. So if you take a trade here lower, it's a counter trend trade. But you can see for the most part, it just went sideways, not really yielding you any money. But if you say, oh, look at here, how much it fell off over a longer period of time, and you notice this polynomial support giving you a signal for counter trend trade. And based off these results, you think it might happen again. So you get into the trade and quickly you start losing money because the trade goes down. Then you get a little relief and the trade sells off again. Bullish or bearish counter trend trades, you never really know what's going to happen with them. If they're going to go all the way back up to resistance or just a little and fall back off. Now for trend reversals. Trend reversals are when you have an uptrend and then price goes into a sideways channel. The key that you notice is you have a double top at resistance, telling you that the momentum of that uptrend is going down. The great thing about the polynomial is it will already start to show you the direction curving downward. After you identify the first resistance and then the second one, making the double top, this is a trend reversal where price should go lower. You can do other technical analysis now that you know support and resistance, identifying the price breakdown of this support level. Or after the double top, look for the first, that's right, lower high. Here we have a bear trend reversal coming down, starts going sideways with the polynomial, shows us a low for support, comes up into the resistance, but remember to go long in a trade, you have to be at support. In this case, having a double bottom, meaning be patient, let price come down a little bit lower before getting in. Comment down below, tell me what you like to trade the best. Now, have you ever heard of the saying supply and demand when it comes to support and resistance? When a stock is uptrending, that tells me that the demand is high. When price is up against resistance, that tells me the demand is too high for me to buy. I have to wait for demand to come down so I can get a better price. Then demand goes up again and I can sell it. This stock is in high demand. Actually, the highest of demand being up against resistance. But I know when demand's going to be low because I have a support channel lower showing me. When I see demand softening as the channel goes lower, it lets me know not to get in this trade long when it comes back down to support. Because what happens after that, demand changes. I don't want to sell here because the demand to sell is very high, nor at any of these places of support. But when price comes up against the resistance, it lets me know that demand is low. I can get a better price because the demand will become great again. And that's why I like the polynomial, because it gives me a center point towards my target, letting me know that price is going to be oversold. And when price is over my midpoint, I know that it's overbought, ready to go lower. Uptrend, underneath the band, lets me know demand is low. For a high demand stock, perfect place to enter and trade. Demand is low. For a hot stock, ready to get into a trade. And now we're going to go a little bit deeper with our technical analysis. We've been talking about big, wide moves and the channels of support and resistance. But now let's talk about two channels. Have you ever heard of two-channel trading? One is the trend. The other is momentum. Here we have an uptrending stock. It's showing us our support and our resistance, which that gives us the trend. Two-channel trading is also going to show you the momentum, which is the smaller pullbacks. As you can see, there's a low and a lower low, giving us the support side of the momentum channel. Here we can see resistance, 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 which gives us the higher side of the momentum channel. Larger channel is up, which is the trend. Smaller channel is down, which is momentum. As price moves up in the bigger trend channel, we can see that we're making higher lows. We can draw a trend line across the bottom of that support. We see our higher highs, and we can draw the resistance line in. Overall trend is up, and then you have an impulse wave that goes with the trend, giving you a big momentum run up into resistance. Smaller channel off the highs and lows, creating a small momentum channel, enter into support, and you get a trend continuation channel higher. With every trade setup, you should be asking yourself, what is the trend and what is the momentum, and be drawing it on your charts, or use the polynomial. Now, I'm going to tell you the secret in this whole thing is opposites attract. And when it comes to trading, you should be looking at opposites. Because we've all seen things like this, uptrend, support, 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 get into the trade, only for us to lose having price sell off in a big way. And that's where the polynomial can help. You would have got into this support entry trade and made really nice profits up into resistance. But this trade you wouldn't have taken because the polynomial showed you it's in the middle of the channel. It's not up against support or resistance. For opposites to attract, you have to have an uptrend and then a counter trend. Here's a little clue. If you're going to buy in at the polynomial support, also buy in at the opposite support line of the momentum. giving you the best entry point to make the most amount of profits. Now for a deeper understanding of technical analysis when it comes to support and resistance. For this, you're going to want to familiarize yourself with the reversal chart patterns or watch our video on reversals. The double top. The double top at highs always has resistance. It's called a double top because there's 1 and 2 tops that happen at this resistance level. The bottom is a low and could potentially make an equal low, but once it breaks through and goes lower, this is the pattern confirmation. And with the polynomial, we see it all the time. Uptrending stock makes 1 and 2 double top. Measuring the lows up, this would be the highest low. So once price broke there, would be the confirmation for price to go much lower. Of course, when we see this trade set up, we take our first profits at the midline and let our runners run. Do you remember this trade on space? 1 high, 2 highs, make it a double top. Polynomial read this correctly with huge profits to follow. Here we have another trade set up. Price hits the polynomial resistance twice, giving you a double top, coming right down to the midline, and let your runners run. Sometimes they can be smaller in nature. 1 high, 2 highs, take your profits at the midpoint, and let your runners run. And that's one trade setup you'll be able to see with the polynomial resistance. Another trade setup is the broadening pattern. It's just as it sounds, starts off small, and then broadens out. With the polynomial, you'll see the resistance side of the broadening pattern and the support. In this, got a double top, and it makes perfect understanding that price is selling off. Broadening pattern up against resistance, perfect trade to sell off. Broadening pattern up against resistance, and it quickly sold off. Here's a really big broadening pattern up against resistance, perfect place to sell off. Because it's so wide, it gives you big profits on big moves. Another one of my favorite patterns is a wedge formation, where price squeezes together, then gives you a big breakout move. Where price squeezes together, with the momentum going from uptrend to sideways, showing you a reversal. Wedge formation, tightening together, right up against resistance, before a big sell-off. Smaller wedge formation right up against resistance, ready for a sell-off. Wedge formation up into resistance, then big sell-off. Wedge formation patterns are a great trading setup. And that brings us to our last one and probably the biggest of all of the moves, the head and shoulders pattern. Head and shoulders starts off with an uptrend. As price comes into resistance, you'll get the first shoulder. Then it comes up higher, giving you the head. Both of these will come into diagonal resistance before price goes lower. Price will give you a double bottom or a neckline in this case. From there, it'll come back up, making the right-hand side of the shoulder, which is actually a lower high from the highest high. A lot of times the shoulders will be about level. The confirmation that the head and shoulders worked is the breakout of the neckline lower. And we love the polynomial for this because you have the uptrend. The first shoulder didn't quite come into resistance. The head came into resistance, also giving us a double top. Then the other shoulder came right perfectly into that resistance before having a huge sell-off. Lots of profits. Here we have the first shoulder, then the head, then the second shoulder, giving you an indication for an entry lower. First shoulder, the head, then the second shoulder, but not quite up to the resistance line. This happens. Just be patient, follow your rules, and get into this trade. It's already come down to the middle line and is selling off again lower. Here's a perfect trade setup for you right now, JNJ. We have an uptrend, then we have the first shoulder, came up into resistance, which gave us the head, and now we're creating the second shoulder. This would be the perfect place to take a trade down. I love trading the head and shoulders pattern because there's such big profits to be made. That was a lot. We talked about trend line, support and resistance. We talked about higher highs and higher lows, support and resistance. We talked about channels, support and resistance. We talked about the 4 patterns that polynomial gives. Now take all this information and put it together to make a better trading plan. If you want to know about any of our courses or the polynomial, then click onto our website and there's tons of information for you there. As always, I wish you the best in trading.